Welcome to the Money Answer Show with host Jordan Goodman. Whether you are starting out, deep into your retirement, or somewhere in between, the Money Answer Show has the know-how to help you. Now here's your host, Jordan Goodman.
Welcome to the Money Answer Show. This is Jordan Goodman, your host. My guest this first half hour is Scott Carson. He's known as the Note Guy. He's the CEO of WeCloseNotes.com, which is an Austin-based Texas real estate firm that specializes in buying and selling distressed debt and mortgage notes of various types. Welcome to the Money Answer Show, Scott.
Hey, man, I'm so honored to be here. Thanks for having me.
So let's just start with a little bit of your background. You've been doing this for quite a while, but just give us your background before you got into it and how you started this whole business of buying and selling distressed notes.
Yeah, it's a different story. I graduated college with a business management degree, went into the finance and banking side of the business, and was working as a vice president for a major bank. And a buddy of mine opened up a mortgage company back in 2004 and came to me, and he was working with a couple of real estate investors traveling the country, different expos, and came to me and said, hey, I really need some help. I've got a growing business. So I jumped in with him, and we really, our mortgage business took off. We were just doing stuff in 30 states and doing a lot of deals originating. And then, of course, we all know what happened in 2008, 2009 with the music coming to an, stopping almost immediately. And so I had a couple mentors of mine that had lived through the RTC days of the 80s, the Resolution Trust Corporations and the saving and loan scandals, and they were like, hey, now's the time. This is an opportunity that only comes around every once in a while. You should leave the mortgage industry because I guarantee it's tough and jump on the other side and start buying up that bad debt. And so, they were a lot smarter than me and a lot wealthier than I was, and so I usually like to listen to people who are in places where I want to go, and so that's what I did. So I stopped originated, left the mortgage business, turned over my half to my buddy, and then just started dialing for dollars and calling banks and asset managers at different real estate funds trying to buy their distressed debt. And that's how it's hard to believe. It's hard to believe it's over a decade ago now.
Yeah, really. So at that time, there was lots of distressed debt. What is the situation today? Is there still a lot of distressed debt to buy?
Well, the market peaked in 2010 with over 15 million homeowners underwater. To this day, we still have somewhere between 3 and 4 million homeowners that are underwater, or they owe more on their mortgage, owe more on their house than their mortgage is worth. And so we still have quite a bit of stuff. Actually, 1 out of 10 Americans is 30 days behind their mortgage already, which is kind of scary to think about. But yeah, there's still plenty of deals out there that we see. I mean, we're constantly buying on a regular basis, whether it's an individual asset here or there from a bank or a mortgage company, or buying in bulk from like a regional bank, whether it's 10 assets or 500 assets.
So you're buying only directly from financial institutions. You're not dealing directly with the homeowners. Is that correct?
So that's correct. Yeah, I mean, we deal directly with the banks. The only time we get involved with the homeowners is after we've already purchased their mortgage and taken on that banking or that mortgage, and then we're reaching out to the homeowners trying to preferably keep them in their house. As we like to say, we like to rehab the borrower. And everybody has a country western song of some sort, and our goal is to really, like I said, keep them in the house and try to figure out and communicate with them. Okay, what happened? Did you get laid off? Are you upside down because the market just crashed? Did you get divorced? Did you go through the big D and don't mean Dallas? Did grandmother get run over by a reindeer? What's the story behind the story, so that we can kind of work out something that's truly a win-win, not only for us but also for the borrowers. Because one of the things you got to realize, Jordan, since this debt is in default, most of the institutions that we're buying from are selling us the debt at substantial discounts of what's owed, so that we have a lot of flexibility to work with a homeowner to either modify or set up some sort of trial payment plan, reduce their interest rate, forgive back payments. We can do a whole lot of variety of different things with the homeowners to really make it, like I said, a win for them and get them back on their feet to homeownership.
So why are the banks willing to sell it at a discount? I mean, at this point, they might have had it on their books for 5 years or 10 years, and when they sell it, don't they have to recognize the loss and it's a hit to their earnings statement?
They do. You are correct. But they would rather get the 30% or the 40% or the 60% that we're paying them, because now they can take that money and go leverage it 10 to 15 times and make their money back on what they lost. You got to realize every state has different foreclosure laws. Now, here in Texas, we can do it pretty quickly, foreclose in 30 days, but then you have states like Illinois that could take a year, or New York, New Jersey, they could take 2 years to foreclose. They would rather get that off their books, let somebody else deal with their nightmare, and that's the way we make money, is by taking somebody's issue and really working on it. And we've got a lot more flexibility being an investor to work with the homeowners versus the banks. So they're they've got employees that don't really care what's going on, whereas we're committed to making something happen because we bought this at a discount and we've got the flexibility to make an above-average return for our portfolio.
By the time you bought the mortgage, typically how long has it been late or distressed, and have they already tried foreclosure? I mean, what kind of things have they tried to do to collect on it before they're willing to sell it to you?
It's a variety of things. Sometimes it's as little as 90 days. Other times it could be 6 years. You have to realize that these mortgages aren't always with the originating institution. So that's maybe been sold 2 or 3 times, maybe part of a larger portfolio. The banks like to spend a lot of their time and their energy on the higher valued assets. And what I mean by higher valued assets, usually $150,000 or less, or more, is what they're spending their time on. The stuff that's below $100,000, while it still costs them the same as a $200,000, $300,000 house, they want to spend time on the upper echelon of their portfolio. They were never meant to deal with this much in default or deal with fix and flipping houses or things like that. So many of them have maybe already started foreclosure process and it's been delayed because of bankruptcy or a temporary restraining order, or the mortgage has been sold 3 or 4 times, and so it's part of a bigger portfolio. They're not really wasting their time on. So that's part of how we make our money, is sorting through a lot of these things. I mean, I've gotten loan files sent to me, Jordan, that the borrower has already walked away from, signed a deed in lieu, and turning the property back over to the bank, and the bank didn't even know it. And so I get a file folder expecting them to foreclose, and the borrower's already walked away. I can list the property tomorrow for sale. I've gotten file folders where there's insurance checks, $20,000, $30,000, $40,000 in insurance checks waiting for the bank to cash them. It's a numbers game, and that's the beautiful thing about it. Is I like to make the joke that we kind of live in the cracks. When we're buying a couple hundred mortgages a year, that's not like Chase that's originating hundreds of thousands of mortgages a year, but there's still a lot of opportunity for that 3% that are going into default each year that we can buy and really create win-wins.
So you're not only doing this yourself, but you're teaching other people how to do this. So tell people a bit of what they can find at your website, WeCloseNotes.com, that'll allow them to do the same strategy that you're doing.
Yeah, what's the beautiful thing about this, Jordan, is I'm not the person doing it all. We got there are vendors, there are teams of servicers that do the borrower outreach. We have attorneys all across the country that are handling the foreclosure. That's the beautiful thing about that. We've got realtors that go look at our properties all over the place. I mean, I'm in Austin, Texas. I can't possibly look at every deal. So one of the things that we have at my website called WeCloseNotes.com, we have hours and hours and hours and hundreds of videos of nuggets and coaching calls and things like that focus on a variety of different nuggets and points to learning this business. If you're a realtor or a mortgage broker or a fix and flipper or a wholesaler in the real estate industry, great, you've got some experience, but becoming the bank is a little bit different knowledge base. It's not, we don't judge the property based off solely the property value or the after repair value. We don't really worry about after repair value if it's occupied. So that's what we spend a lot of time. 10 years ago, when I got started in the business, I was doing well, but I had more deal flow than I had money. And so I started just teaching people, because people would come up to me and see, well, hey, I like that deal you did. Can you teach me more how you bought that 21-unit apartment complex at 50 cents a dollar, or how you bought that duplex in Jacksonville for $7,000 or $10,000? And so I just started teaching people and sharing the knowledge base that I was learning and going through and what was passed down to me, because there's more than enough deal flow. There still is to this day. The note industry is a little bit different. I like to say that we believe in a term called co-opetition. We're all out trying to make money for our own bottom line, but it's a smaller network of cooperating investors who are working together to either buy in bulk together. Instead of buying at Walmart, we're buying from Sam's, and we get a bigger discount when we're buying together. B, we were using a lot of the same vendors, attorneys, realtors that understand it, and they're doing the foreclosure process for us. Maybe it's a servicing company like Madison Management out of New Jersey who's working with a lot of our students. And then the third thing is we're just seeing a lot better pricing. A lot of your real estate investors are going out for fix and flips, and they're paying 70, 80, 90 cents of the dollar. I mean, that's hard to make money unless you've got a lot of value add to the property. Well, we're not usually paying above 65% of as-is value for the mortgage, and that's only in a fast foreclosure state. Most of the time we're buying at 50 cents of value or less. So those are some of the things that I really love about the note industry. I mean, we can do this from anywhere, and that's what I've been teaching people since 2010 is that, hey, you can do this whether you're in Austin, Texas, Austin, Minnesota, or across the pond in Austin, England.
Yeah. So if people don't want to do it, but they want you to do it for them, what is the minimum that they have to invest to be part of one of your deals to buy a bunch of notes?
So what we usually do is we like to have people start off somewhere with depending on their experience. I turn a lot of people away. It depends on what their experience is and then what they're looking for. But usually, 50 to 100 grand will allow me to get started. We can usually have them get into 3 or 4 different individual aspects over that 50 to 100 grand. That way their money's a little bit leveraged. Out of that 3 to 4, they'll probably have 1 to 2 of them that'll get reperforming, that will reach out to the borrower and get them back on time with payments. And then we end up foreclosing about 30 to 40% of the time where the borrower just either sticks their head in the sand and won't answer to our letters or our door knockers or attorneys, or they just tell us to go pound sand, and we just said, okay, that's fine. Let's just take it the legal way.
Yeah, very good. All right, we're going to take a break. This is Jordan Goodman of the Money Answer Show. My guest for this half hour is Scott Carson. He's known as the Note Guy. You can see he's an expert in buying distressed debt or mortgages, and you can find out more at his website, which is weclosenotes.com. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this half hour is Scott Carson, known as the Note Guy. He deals in distressed mortgage debt. You can find out more at his website, weclosenotes.com. Welcome back to the show, Scott.
Jordan, thanks for having me back, bud. Just excited to share some note nuggets with your audience today.
Absolutely. Tell us also you have a book about this topic and how people can get that book.
Yeah, a couple years ago, we've done so many videos and so many webinars, and some people like to read. So what we did is we took a bunch of our videos and transcribed them into a book, and it's a pretty easy read, 73-page book that they can download for free. I mean, it's on Amazon for like $19.99 or whatever like that. But if they go to noteblueprint.com/free book, they'll be able to download it. It's called How to Buy Real Estate for 40% Off. It's basically, I talk about how to break in to the secret world of note investing. I think we've gotten, given away 10,000, 15,000 copies of it. We're just glad to really provide some really good knowledge and actionable steps that people can do to get into the note business. Most people, years ago, have maybe heard about it. If you've ever seen The Big Short or Too Big to Fail, it talks a little bit about, kind of this business. And we're a smaller aspect of The Big Short. That they outline in that book and the movie. But the beautiful thing is it's not as difficult as it seems for some people. There are banks out there that will sell you stuff on a regular basis. Now, you're not going to want to reach out to Chase or Bank of America or Citibank, those big 5 or 6 banks. I mean, unless you're going to write a $50 million check, then they're not going to even really talk to you. But there's still 4,000 plus lending institutions and originating companies across the country that have stuff on their books, that they're willing to sell off and on an individual basis. I mean, you're not going to go down to your local bank and knock on the door and say, hey, I want to buy your notes. They might call the police on you. But you get anything out of it. I love your commercial about LinkedIn. At the break a few minutes ago, we use LinkedIn a lot to track down asset managers and special asset managers and secondary marketing professionals are the 2 job titles that these individuals go by at the bank. I'll say it again: secondary marketing professionals and special asset managers. And there are hundreds of thousands of these individuals on LinkedIn that you can reach out to. And I use LinkedIn on a regular basis to to connect with them and find out they've got anything on their books at different institutions. And oftentimes it leads to great, on the phone conversations and emails that lead to us getting deals.
Great. We've talked a lot about the acquiring of the notes from banks, but let's talk about once you own it, what are some of the different strategies you can use to realize some of the value? You're buying it at 50% or less than value. You're not going to get it up to 100%, but what are some of the strategies you can use dealing with the homeowner to get it to either be performing, or I guess you sell it to other people? Tell us a little bit about the selling side once you've acquired these notes.
Great question, George. Really great question. There's basically roughly about 10 different exit strategies that you can do. When you get a list sent in to you from a bank and you have it under contract or have it negotiated down at 50% on value, you could very easily wholesale those individual notes off to other investors. All the bank cares is who's going to fund and that the money comes in. So wholesaling is one way for investors to make money. The second way that we love to do is always try to get the borrower to reinstate. Once we buy the note, we reach out to the homeowners in the first week to 2 weeks and say, hey, we're now your new bank. We don't care that you weren't paying ABC Bank, but you need to start working with us now. So reinstatement is always our favorite exit strategy. Try to get them to say, we know you've been through a financial hiccup. Let's just start having you pay on time. Now, if they can't pay their existing payment, then we look to do a loan modification or a trial payment plan. We'll reduce the interest rate, principal. If they make 6 to 12 months of on-time payments, then we can do a lot to forgive and forget and really turn it into a reperforming note. And I'll get to that in a second. If they can't do a modification, we try to see if they have somebody that can come in and take over payments and do a loan assumption. Maybe it's a sister, a sibling, a parent, a kid, neighbor or friend that can come and take over the payments. If they can't do that, then we'll try to do a deed in lieu, where we'll have them sign the property over and walk away. Sometimes we'll do cash for keys, where we'll give them money and let them walk. Pay $2,000, $5,000 to help them move, or hold the money in their pockets. And then they just turn the property over and walk away. If they don't do that, sometimes we'll do a short sale, where we'll list a property and list it like a traditional short sale. Now, we don't usually take 9 months to get them approved. If they have a buyer that comes in that's pretty close to where we need to be, we can get it approved in minutes versus months. Sometimes if it's a smaller valued asset, sometimes we'll get a full payoff. Sometimes they'll go cash out their IRAs, their retirement accounts, or go get money from a family member to pay us off. And we'll often take a discount off of the true what's owed, so we can make that happen. But as long as it's above what we paid for the note, that's helpful. Our least favorite strategy is to foreclose. It still happens quite a bit of the time. And then, like I said before, if we can get them reperforming, if we can get them start making payments on time for 6 to 12 months, it reclassifies that asset as a performing asset. And now, if we bought it at 50 cents of what's value, we can now turn around and sell that note at 80, 85% of value back to other banks, other lending institutions, other investors, people that have IRAs. They're looking for a good return on investment for their money. So those are pretty much the main strategies. Oh, there's one more. If for some reason we're working on an asset, let's say like I'm buying an asset in Missouri, and the borrower's going to be in a pain in the rear, and they're going to drag this thing out. The fact that I know that it's going to be a drawn-out foreclosure process or thing like that adds value to the deal, because I know which exit strategy is really going to go around. So I could turn around and sell that note after I bought it for a quick maybe 5 or 10% profit margin. Still leaves plenty of meat on the bone for the end investor. But there's so many ways to make money in this industry, and that's why I always say, listen, if you get into this, your least profitable strategy is to foreclose and take the property back. A lot of people get this, I want to use this to buy assets. Well, you're into this in the paper game. The biggest banks, the biggest institutions in the world are banks that are getting cash flow. You have to keep that in mind. One of the major mistakes I made early on was coming from the mortgage side, the real estate side, was trying to foreclose on everything when I should have been trying to modify everything. I left a lot of money on the table my first 2 years in this business that I could have kept or made a lot more by just working with the homeowners versus trying to foreclose on everything.
So what's the typical, I know there's a range, but the typical amount that you're going to realize if you're buying the asset at less than 50 cents on the dollar, what is a range of what you're going to realize, no matter what of these strategies are you going to use to sell?
So great question. Let's just use some basic numbers. Let's say it's a house that's valued at 100. Let's say the borrower owes 110. They're a few months behind. Okay. Well, if we're buying it 50 cents on the dollar of value, that means we're paying $50,000 for it. Okay. Now, let's say the mortgage is written at 6% interest rate. 6% interest rate. Well, if we can get them to start paying on time immediately in the first 30 days, we'll reach out. That's automatically a 12% return on investment for us. Not too bad. Now, if we get them paying on time for 12 months, now we can turn around and sell that asset at 80, 85 cents on the dollar. So we've got a 12% cash-on-cash return for that first 12 months of payments, and then we're making another $35,000 when we sell that note off at 85%. That's a pretty good return on investment to be in the deal. Now, we don't always sell all of them off. A lot of times we like to keep the others for cash flow, but you can start working those numbers. Now, if the borrower doesn't work with us, then we take it to foreclosure. We may have to, depending on the season, we may have $5,000 in foreclosure costs, may have to put $5,000 or $10,000 into it, or paint and carpet. Hopefully it's in good shape, or $5,000 or $10,000 to get the borrower to walk away. So now we're into it for 60, 65. We sell it at 90. We made $30,000, $35,000 in profit on a $60,000 investment over 12 months. So a pretty good return as well.
Who is this appropriate for? The students. What do you have to have to make this work? You could hear about this, but what kind of a attitude or work ethic do you have to make this strategy work for people?
So I would tell people this is not a get-rich-quick scheme. It's a build wealth over time. And we have a lot of people that start part-time, 10 to 15 hours as a side hustle. You've got to be patient. You've got to be coachable. Numbers, if you're good at numbers is a strong point. I will say this, engineers overthink this because of the different strategies a lot of times. And we got some very successful engineers as students, but you got to kind of work with the flow. You've got to be very detailed because there's a lot of things that are moving back and forth, documents that need to get recorded. You're talking with your attorneys on a weekly or bi-weekly basis. I like to joke there's a lot of hurry up and wait. Hurry up, let's get closed. Okay, now we got to wait for the assignments to get recorded to the county transferring ownership. We got to wait for the servicing company to get their letters out. So you've got to be detailed. You've got to be patient. If you want your money flipping every 30 days, this is not for you at all. Okay.
No.
And every state's a little bit different. Some people try to dive in and buy in all 30, 40, 50 states all at once. You're not going to do that. I always tell people start off picking like 2 states. And learn those 2 states. Learn the foreclosure time frame. Build a team with a realtor who can give you good comps and can drive by the properties in the area. Really get to understand those markets, those cities, the days on market. What's the good zip codes? What's the bad zip codes?
There's a lot to learn. There's a lot can be profitable, but it's not, as you say, instant.
Yeah, we get a lot of landlords, a lot of lazy landlords that come into it and do really, really well. They're tired of the dealing with toilet tints and trash outs, and would just rather be on the paper side of investing.
Very good. Well, thanks so much. My guest this half hour has been Scott Carson. You can find out more about him at his website, weclosenotes.com. And you can also get a free copy of his book, which is called How to Buy Real Estate, for 40% off by going to noteblueprint.com/free book. Thanks so much for being on the show. I think people have learned a lot, Scott.
Thanks for having me, Jordan. Appreciate it.
Thanks very much. And we'll be back after this.
You've been listening to The Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to The Money Answer Show. My guest for this half hour is Seth Williams. He is a land investor, residential landlord, with nearly a decade of experience in the commercial real estate business. He is the founder of RETipster.com, which is a real estate investing blog and a website on all kinds of information on investing in real estate. Welcome to the Money Answer Show, Seth.
Hey, Jordan. Thanks for having me. It's good to be here.
Just tell your story a little bit about how you got into the whole real estate market as a start.
Yeah, absolutely. So, I had gotten into real estate investing quite a while ago now. Back when I was in college, the idea of real estate first entered my mind when I read the book Rich Dad, Poor Dad from Robert Kiyosaki. I'm sure you've probably heard of that.
Sure.
And it was a great book, but it didn't give me a whole lot of information about how to find real estate deals, how to close on them, how to manage them, all the stuff that goes into real estate. And so, it was about 2006-ish when this was all happening. And, I started spinning my wheels a lot. I was trying to find great real estate deals on the market, but it was really, really difficult. I spent just hundreds of hours scouring the MLS, trying to find a deal that would make sense. And I just couldn't do it. And I didn't understand what I was doing wrong. I didn't understand how people succeeded in this real estate investing thing because I couldn't figure out how to find deals that made sense. It's actually kind of similar to the world we live in today because real estate deals are pretty hard to find right now. And it wasn't until I learned about a pretty specific way to get a list of property owners from the county where I could send out mailers to, hundreds or even thousands of people and get people calling me so that I could then make really, really, really low offers, and a lot of people would accept them. So these would be cash offers. I was able to buy properties for literally like a few $100s with the cash in my bank account, buy them free and clear. And when you buy properties for that cheap, as you can imagine, it's not that hard to resell them again for a higher price. So for me, that was like
properties that are typically not on the market at the point. They're not listed
Correct.
in the listing services, right?
Yeah, yep. And that was a huge part of it, is just realizing that the best deals out there are not going to be the ones that have a for sale sign in the front yard. They're deals that I have to really root them out and find them and contact the property owner directly. So, yeah.
So what is are you sending them postcards or letters? What are you sending, and what is in that letter that can convince somebody to sell their house when they haven't wanted to list it?
Yeah, when I was getting started, I used postcards. Really, it's not that hard to put together a piece of communication that conveys, hey, I'm looking to buy real estate in your area. I see that you own real estate. If you want to sell it, give me a call. It's really that simple. Maybe some eye-catching graphics or something like that. But really, the power is in the list, getting the list of the right people who, there's a pretty high probability that they're going to be not just willing but happy to sell their property for almost nothing. And for me, the first way I found that was through something called the delinquent tax list. And there's actually a lot of different lists like this that you can get, but this was one that worked really well for me. And it's basically just a list of all the properties in a given county where, the private owners still own the property, so the county has not come in yet and seized it for non-payment of taxes. However, it wasn't going to be that much longer until that happened. So they're just currently back due. And, generally, if somebody has delinquent taxes, not always, but a lot of times it's a pretty good sign that there's an issue that needs to be resolved here. Either they don't want their property, or maybe they inherited it, or maybe they can't afford it for one reason or another. Like, if they don't sell this thing soon, they're going to lose everything. So, a pretty compelling case can be made in a lot of cases where you can say, hey, you're about to lose this thing and get nothing. However, I will pay you X number of dollars cash and close, within a few days if you're willing to sell. So no pressure, but just want to let you know that offer's on the table if you want it. And
it's
when you're talking
to a motivated seller, right?
Oh, absolutely. Yep. Yeah, motivated sellers. And
these are single-family homes that you do, or other apartment buildings, other kinds of things as well?
I have had offers accepted on single-family homes, but when I was doing this, I was specifically targeting vacant land properties. Because with vacant land, a lot of people kind of scratch their head when they hear vacant land. It's like, what? Like, why? I don't get it. But really, vacant land makes a lot of sense, possibly even more sense than houses when you're using this strategy, because, my goal is always to flip it, just buy it and sell it as fast as I can. And with vacant land, you have none of the complications that come into play with a house. There's no tenant, there's no dilapidated property that's fallen apart. Nobody can steal or destroy anything. It's just a plot of dirt. And it certainly does have a value to it. And the key is I'm able to get that for almost nothing. And when you own an asset that has a certain amount of value and you buy it for almost nothing, it's just not that hard to turn it around and sell it without having to visit the property, without having to do hardly anything or any of the complexities that come with a house.
Before you buy something, how do you know what you're going to be able to sell it for and who you're going to be able to sell it to?
Yeah, that's kind of a tricky thing, is valuing vacant land. And that's something that I think any land investor always has to kind of figure out how to deal with. Because land is very different from a house. With a house, it's pretty easy for an appraiser to go there and say, okay, it's got, 2 bathrooms, 3 bedrooms, this many square feet. similar houses are selling for this much, so boom, that's what it's worth. But with land, you don't have a lot of those metrics. There's no cost to rebuild it that you can take into account because there's nothing there. A lot of times the comps aren't there. So it's kind of an art and a science to figure out what that thing is worth. But these days, it's actually getting easier and easier to find comparable properties. Even if it's not the exact same type of property, you can at least find other vacant lots within that zip code or even within the county and sort of quantify it based on how large those properties are and how much they sold for. So I don't think there is a magic bullet that will give you 100% confidence, but there's definitely a lot of different things you can look at to help come up with a number there. And then in terms of who you're going to sell it to, right. For me, usually what I'm doing is I'm listing these properties for sale on a free marketplace like Craigslist or maybe even Facebook in a buy-sell group or the Facebook marketplace. And really, it's the end user. So I'm trying to market this thing to anybody in that area who wants to buy land, whether they want to build a new house on it or use it as like a vacation getaway property or hunting land. I really just get the best pictures I can of it and put all the information together and put it out there. And 9 times out of 10, the person that buys it is the end user. It's not another investor who's going to buy it from me and then try to sell it to somebody else. So that's how my situation works anyway.
And you do this not where you're located. You can do this anywhere in the country. You're not actually visiting the land in person. Is that right?
That's correct. When I got started, my first few years of doing this, I thought that I had to do this in my own backyard. I thought I could only do it in the state where I lived. I thought I had to visit it in person. And I will say, if you can do that, there is some benefit to being able to do that. I'm not going to say that's not helpful, but I don't think you need to constrain yourself to only that. I haven't bought a property in my own home state in several years now. So I'm in Michigan. Most of the properties I buy this year anyway have been in Colorado, Washington. A couple of years ago, I was doing New Mexico, and I've never even been to New Mexico. So that's you don't need to see them in person. It's really just a matter of finding people in the area who can go get pictures for you and do any on-site work that's needed, which, again, is really not that hard when you're just talking about vacant land. It's pretty straightforward.
Are you dealing with local real estate brokers typically to help do the transaction? They might know the people who want to use the property?
I don't want to say never, but 9 times out of 10, when it comes to selling land, a lot of the real estate agents I've come into contact with don't really know what they're doing with land. I think it's just kind of a different animal, a very different type of property than a house or something like that. And so I think twice ever have I hired a realtor to try to sell my property. And in both cases, I was able to find the buyer before they could, just by using things like Craigslist. Okay. So I sometimes I'll use a realtor to help me get pictures or maybe to facilitate a transaction, but 9 times out of 10, it's just not necessary.
Now, you put together a new guide called the Land Investor's Guide to Getting Started. Yes. Tell us what's in that and how people can get it.
Yeah. So if you want to go to retipster.com/getting started guide, all one word, it's basically just a free PDF ebook that I put together that explains all the initial steps of how to get started as a land investor. So it doesn't dive into a ton of the details of specifically like where do you find the deals? How do you do the direct mail? I've got a lot of that stuff elsewhere on my website, but in this ebook, it basically just talks about, okay, you want to get into this business. These are sort of like the essential things that I would put together in terms of just the business infrastructure, in terms of a phone system, mailbox. Do you need to have an LLC? Yes or no? If you want to do that, how do you do it? A lot of those initial steps. So if you just kind of want to get the ball rolling and get things moving, these are the first steps that I would recommend people take if they want to do it.
And then you also have a free document called Investor Hacks. Yeah. 20 essential tools for real estate investors. How can people get that and what's in that?
Yep, that's retipster.com/hacks, HACKS. And that is a list of 20 of the tools and resources that I use every week, if not every day, in my real estate investing business. So I just sort of list them out, explain what they are, why they're helpful. And I also have links within that to a lot of other videos and blog posts that they don't just say what it is. It very specifically tells you, here's how to use it if you want to use it. So for what it's worth, if people want to run a business like mine or anything in the real estate investing world, there's a lot of resources in there that will probably be helpful.
Terrific. We're going to take a break. This is Jordan Goodman of the Money Answer Show. My guest this half hour is Seth Williams. He is a land investor, residential landlord. He's the founder of RETipster.com, where you can follow up on what we've been talking about. And again, to get a free copy of his Land Investor Guide to Getting Started, go to retipster.com/Getting Started Guide. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this half hour is Seth Williams. He is a land investor, residential landlord, and founder of RETipster.com, which is a website and blog about the world of real estate investing. Welcome back to the show, Seth.
Hey, thanks, Jordan. Good to be back.
So who is this appropriate for? Who is going to be successful at buying and selling land, and who is not going to be successful at it?
Yeah, I think it's something that, technically pretty much anybody can do. I do think it's important to have realistic expectations, though. A lot of times, people will maybe hear like an awesome grand slam story of somebody who bought a property for $500 and sold it for $20,000, which can definitely happen. I've experienced that kind of thing before, and it's pretty great when it does. But I don't necessarily think that's the norm. And it also, I think in the first year of getting started, it takes a lot of patience in terms of really getting your arms around how this business works, how to be efficient, what kind of direct mail strategies work. Just in the world of direct mail, if you know anything about that, there's so many different variables in terms of where you get your lists from and how you sort them and what kind of mail piece you send out. And it's one of those things for me, I think I had a pretty good success rate on the second campaign I ever sent out. Some people do great on the first one, but it doesn't always work that way. Sometimes it takes, maybe 5 or 6 or 7 attempts before you really find your groove. And that's one of those things you need to allow room for that. And if you're somebody who, you need immediate results right now, or say if you're with getting started, I usually think it's good to have, at the bare minimum, $1,500 and no less than that, just to cover the cost of direct mail and just your startup costs. I had about $3,000 when I got started, and I needed every penny of that. So if you have no money to your name, I would say maybe just save up for a few months until you do. And also, if you're somebody who needs immediate, perfect results every time, this probably isn't the right business for you either. Just because, while it's possible, I don't think you should plan on that.
What kind of return do you get on direct mail? What % of the people respond to when they get the letters or postcards?
Yeah. Well, there's usually, there's the response rate, people who just respond in some way, shape, or form, and then there's also the acceptance rate. People who actually will accept the offer that you send them. Because remember, in this business model, we're making offers that are very, very low. When I know what I think the market value is, my offer will be anywhere from 10 to 30% of that number. So it's crazy low. Any rational person would not accept it. But again, we're not looking for normal people like you or me who actually cares about getting full market value. We're looking for people who are apathetic, they just want out. Money is not the issue to them. They just want this monkey off their back. It's what was the original question again? Sorry, I'm blanking on that.
I was just saying, what is your response rate and the acceptance
response rate? Yeah, so I would consider a reasonably good response rate to be about 5%. Sometimes it's 10, 15%, but 5% I think would be what you would want. And in terms of the acceptance rate, when I know I actually did a great campaign that succeeded, it's usually 1%, maybe 0.5%. But if it's less than that, then it's okay, something kind of went wrong here. I got to reconfigure how I'm doing this.
Yeah. Okay. And how much money do you need? You talked about $1,500, but if you're going to buy lots of people's properties, even if it's a low amount, what amount of capital do you need to get started and be successful in here?
Yeah, well, I can just give you an example from my own experience. My first deal I ever bought was a half-acre property that I paid $331 for, and then I sold it a couple weeks later, 11 days later to be exact, for $1,900 cash. And to get to that point, I had spent probably about $500 total just on direct mail. I had one county that kind of flopped, and then this happened on my second direct mail campaign. And again, I had about $3,000 to start with. So, there's other just startup costs like, getting your phone system put together, however you're going to answer these phone calls or if you're going to screen them in some way. So just, getting your infrastructure and your first shot of marketing sent out. I would plan for probably $500 to $1,000 and then whatever cash you think you're going to need to buy that first property. So that's why I say like $1,500 is, like, I would say, in my opinion, that's the absolute lowest. Like, I wouldn't even try it unless you have at least that much, and preferably more.
Is there a lot of competition? I mean, if there's a lot of people sending letters and postcards to the same people, and you're the second or third or fifth one they're getting, it sounds like, you have to be the first one to make an offer to get them to accept it.
Yeah, I would say there's more competition today than there was 10 years ago when I was getting started in this, but I wouldn't say there's a lot. And it also depends a lot on which market you're working in. I will say that the one time that I found myself when I actually encountered, hey, somebody else also sent mail at the same time I did, and we're hitting some of the same people. Even then, I still got 5 deals from the one campaign I did in that county. So it's like, did I lose deals? I don't know, probably, but like it didn't mean it didn't work. And compared to things like, trying to get houses this way, like that's like 100 times more competitive than land is. So I think the competition, like it's not non-existent, it's out there, but it's not like a deal killer, or I'm sorry, I guess it could kill a deal or two, but it's not like a game changer in terms of making the business not viable. And also the other key thing to remember is even if you're working in the same county as 2 or 3 other people at the exact same time, a lot of this depends on like how you are pulling your lists. Like in terms of where you can go to get these lists, a lot of people will use a service like datatree.com or agentpro247.com, and you can filter these lists based on, okay, I want all the people who own land at around this value range from sizes of 1 to 5 acres, and that's who they'll get on their list. Whereas person number 2 may be filtering it very differently, saying, I want only properties that are from 10 to 20 acres in size. So like right there, you're getting 2 totally different audiences. Just because you're in the same county doesn't mean you're hitting all the same people. Yep. So it's certainly, like I think you'll inevitably run into competition, but it's not like it's going to ruin the business for you.
What was your biggest home run ever? What was your biggest deal success?
Yeah, a common deal I talk about, because it was just pretty awesome how it came together, was a property up in northern Michigan. It was 12 acres on Lake Huron with about 500 feet of beach frontage. And I made an offer to this lady for about $4,500. And so I got 12 acres free and clear, $4,500. And then I turned around and sold it. It took about 5 months to sell, which is actually kind of a long time in terms of land, but about 5 months later, it sold for $45,000. And granted, one of the things to remember is this was in the middle of 2011 in Michigan, which was probably like the number 1 worst state to be in the entire country. The economy was terrible. Nobody was buying real estate. If I would have held on to that for just a few years, like I'm sure I could have sold it for 2 or 3 times more than what I did. I was just kind of like I was kind of nervous and like, hey, I want to sell this thing fast. I just want to get in, get out. But yeah, I mean, and also to this day, I've still never seen the property. And when that deal happened, it was one of those light bulb moments when I realized like, there's really no reason I need to be doing this in Michigan. Like I can do this pretty much anywhere. So anyway, but that was just a great deal, and it kind of a turning point for me just in terms of understanding what was possible. And yeah, it was just a great deal.
Great. What are some of the traps that a lot of people tend to fall into in getting into this buying and selling land business?
Yeah, that's a great question. One of the traps I think a lot of people, including me, even after all these years, are still susceptible to is doing proper due diligence on vacant land properties before you buy them. So, and it's kind of a tricky thing because on one hand, land is a pretty simple type of property because there is no improvements on it. However, that does not mean you can just shoot from the hip and buy stuff sight unseen without looking into any details. For example, if a property is located in a flood zone, or if that property is not buildable, or if there are setbacks that make it impossible to build anything of real value, or if there's wetlands on the property. There's all kinds of things, even like the slope and terrain of the property, that can hinder its value. And it doesn't mean you shouldn't do the deal if you discover that stuff, but you definitely want to know about that before you buy it. And if it's a serious problem, you want to factor that into your offer price. You don't want to just, go sailing forward assuming everything is going to go swimmingly well, buy it at a price that reflects that assumption, and then realize, oh, there's actually this huge problem, and the value just took a massive hit that I didn't know about. So it's one of those things, it's kind of a pain, honestly, to do this due diligence on every property before you buy it. So I think a lot of people sort of trip up when they just don't do the work. Like they just buy it, assuming it'll be fine. But on the same coin, that's also part of the idea behind making such low offers, is that even if you end up being wrong about your assumptions with the property value, or even if you overlook one of these due diligence items, you still have this massive profit margin buffer in there to protect you. So I'm not going to tell you you'll be like invincible or anything, but it helps a lot when you don't take out loans and have this massive investment into the property and everything must go perfectly or you're going to be in the red. That's not really how land works because of this big profit margin that's built into every deal.
Terrific. Well, thanks so much. My guest this half hour has been Seth Williams. He is an expert in buying land and reselling it. You can find out more at his website, RETipster.com. You can also get a free copy of his Land Investor Guide to Getting Started at RETipster.com/Getting Started Guide. Thanks so much for being on the Money Answer Show, Seth.
Awesome. Thanks, Jordan.
Thanks again. We'll be back next week with another edition of the Money Answer Show. Goodbye for now.
Thank you for joining Jordan Goodman and the Money Answer Show. If you have a question for Jordan, please visit his website at www.moneyanswers.com. And be sure to tune in every Monday at 12 p.m. Pacific Standard Time right here on Voice America Business. See you next week.